Hi guys, it's me, Teresa Perrin. I want to discuss ticker GOCO. That's G as in golf, O as in Oscar, C as in Charlie, O as in Oscar with you today because they have earnings tomorrow, Thursday, November 10th in the after hours, and I believe that it could potentially 2x. I said by the end of the week, but given the fact that Friday and CPI data, maybe it takes a couple more days, but I think it could still, if the earnings are great, double very quickly. So that's based off of what I've seen with other earnings plays on this stock. And if you follow me, you are well aware I've been calling out the moves in this one very consistently. So I do believe that we see a nice run provided we get good earnings and market conditions allow it, because as you can see, a lot of stocks that should be running based on great earnings are not. So keep that in the back of your mind too. But I do believe that this should be on everybody's watch list for tomorrow and Friday. Let's get started. And nothing I say is financial advice. Always do your own DD. I am not recommending you buy, sell, hold, do anything with any stock ever. All right, let's get started. All right, so GOCO was up 9.39% today, guys, and it even hit as high as 50 cents right at the end of the day. I do believe we see this continuation tomorrow, and I wanted to tell you that this is not BS where I'm thinking that this could double from. This is last time we went into earnings. It started around 50-60 cent range, got to 64 before it made this nice big green candle that you see right here and got all the way up to $1.09. And as you can see, then the shorting started and the sell-off and boom, right back down where we are right now. But this, guys, has been, making a beautiful cup handle, and it's starting to break out of that handle formation. So therefore, I am very, very bullish, and it's been beat down very badly. In the past 3 months, it's down 25%. This is just to show you that earnings are available tomorrow in the after hours, which is why I am bringing this to your attention again. Now, guys, if you go back and watch or look at my Twitter feeds, I've been telling you about GOCO since it was 30 something cents, and I said once it breaks that 42, look for that run. Once it gets past 47, then we're in a great place. And right now we are in a great place. It currently is giving a short and medium weak bullish signal. So guys, the reason it's weak is because there were some sells in between and some neutral ratings. But all in all, there's 6 bullish, 3 bearish, 3 neutral signals. I do believe, like I said, this is going to go to the upside, and we're going to talk about some more reasons that I feel this. Now, based on the 5 analysts that have reviewed this stock, it is given a hold. There is 20% strong buy, 40% hold, and 40% underperform, with a price target average of $1. Again, that's double from where we're at right now. More than double, right? With a low of 75 cents. Even that, guys, is like more than 25% from where we're at right now. And a high of $1.25. So, obviously, I would like over the long term for it to move much higher than that, but as price increases, so will analysts' ratings and their price targets. Now, the average volume is 1.1 million, and we made this nice move up today with less volume than normal. 997.43 thousand shares were traded today. The free float is 80.2 million shares, and the shares total outstanding are 329.29. Now, keep that in mind, 329.29. I'm going to jump ahead and show you why I say keep that in mind. See this little question mark here? It's because I said, how on earth, because Fintel is showing this, and this is to go to show you that the information you're getting on Fintel is behind and not always accurate. Again, use it as a tool only because I do not trust what it's telling us. Since it says that the shares outstanding are only 132,207,324. And insiders own 179 million. I'm sorry. Sheesh. I'm tired. 179,096,382. Well, guys, the shares outstanding are only 132. There's my question mark. How would that be possible? Well, had you have not gone back to my little handy dandy page here that shows you your total shares outstanding is 329 million, what would you automatically assume? You would assume, holy bejeebus, the short interest in that from just the insiders is like humongous. But guys, anyways, the institutional ownership is over 50% in this stock, which is huge. That tells you they have confidence in their stock. Either that or they're getting some really great benefit plans, right? Anyways, let's look at what the institutions are doing. All right, so institutions own 66,714,633 shares, which is showing 50.46%, which, guys, that is not correct if you go back and you do the math. But again, between institutions and between insiders, they own about more than 2/3 of this entire float, okay? So there's big money invested in this, not just retail, which, for a cheap stock, you want to see that, guys. If there's no institutional buying and there's no insider ownership, then I think we have a problem. That's not the case with the stock. It looks good. Now, again, take this with a grain of salt because the information is old, not always accurate, and I found out that they don't have to disclose whether they're short unless they're buying for like a hedge for a pension plan or something like that, guys. So these ownerships may not be accurate with what they tell us, but as far as what Fintel says, there's 147 total institutions invested in the stock, of which 136 are long, 5 are short, and 6 have long short positions. Again, take it with a grain of salt. Now, the short interest is showing 4.57%, but clearly we know that how can we expect this to be right when nothing else is? And 7.54 days to cover. Yes, 7.54 days to cover, guys, because there's not a lot of volume that goes into the stock. So if it suddenly got volume and started to squeeze, it could be phenomenal. Now, there's still 400,000 shares available to short, and the cost to borrow is very, very small, 2.24 to 2.40, the latest being 2.37%. So very, very cheap. In the past 2 weeks, the short volume ratio has been between 30.85 and 66.70%, with today being 41.56%. Now, I ask myself, why on earth, when the stock has been trading under 50 cents, are they still shorting the crap out of it? Guys, I have no clue, because if you do a little DD on this company, I think you'd ask yourself the same thing. Why? They do like Medicare insurance type billing stuff. So doesn't make sense. But whatever, to each their own. I guess in this market, you short anything and everything. At least the institutions seem to be. And I'm just bringing this up to show you failure to delivers are not an issue with this stock at this time. So this is not an issue. Now, guys, if you do decide to take the trade, I wish you the best of luck in it. Again, I think that the stock could have significant moves, and I have been following this chart, waiting for these moves and watching carefully and learning about the movement of this stock, for the past several months. So I do think that we are going to see a substantial move if earnings are good, or they say something that's bullish. Now, obviously, all that goes out the window if earnings are really crappy. So, with all due respect, I hope that, well, I shouldn't say with all due respect. With all due wishful thinking, I hope it goes up instead of down. That would be fabulous. But guys, just take it with a grain of salt and get ready for a nice move. I think it is going to head to the upside. But again, keep in mind, market conditions can also change that. Fubo should have absolutely ripped on those earnings. Nvidia today, NVTA, great. I mean, look at that movement. It got to $3 and it came all the way back down under what it started at. I don't understand earnings. And then crap-tastic companies with really bad earnings dip and then they suddenly go on these rips. I just don't understand. This market is very volatile right now and doesn't seem to be being traded on fundamentals. The fact that Meta was trading down at $80-something should tell you something. Yeah, guys, earnings weren't what they expected it to be, but to have that kind of a drop on what they were, you wouldn't see that if we weren't in this crazy bear market. It's just absolutely nuts. And then, to be ripping out of the fact of layoffs, that's the stock market for you, though. So when you see companies announce massive layoffs, expect to see those stocks running. Keep that in mind because there's going to be a lot more to come. Anyways, guys, thank you for watching and have a great night.